All right, so today is Wednesday, February 5th, 2 p.m. section. We're going to first start out by talking about the Bloomberg Trading Challenge. Your 6 team captains have been registered, so I want to talk about how to access and get the trading challenge. The only people that can get there are the people who are just registered. The rest of you cannot access the trading challenge. Your captain to get there in Bloomberg, short code TMSG, T message. All right, that's also called Trade Ideas. Don't know why, but that's the trading competition. When you go there, you'll get to a screen that looks similar to this. Even though you will only see your network, which is your class, which is who you're competing against, every time you get here, you have to click on this drop-down menu and select your class. All right, you are BMGT 443 spring 25, 301. All right. Now, it's blank right now. As you start to trade, your names will show up, right? And you'll see the 6 teams that are in your section, right? Now, this is unique because Bloomberg has a trading competition using this, which goes across schools. It's public, all right? We are unique in that they let us do it ourselves by class. They made me an admin to do it, right? So nice part of our license. Can't do this to other schools. So a very valuable part of this competition. So you've all been given $1 million hypothetical dollars. You can basically start to trade. So just as an example, last semester, here was one of the sections last semester, which ended in December. I just haven't ended it. So it just keeps trading with where they left off. But you can see these are the 6 teams in a section, right? You are going to be scored on portfolio value. Okay. So in 6 weeks, the team with the highest portfolio value gets 5 points, then 4, 4, 3, 2, 1. That'll be the point grading distribution. Doesn't matter whether you win by $1 or $10,000 or $100,000. It's just relative performance. So the winning team last semester had a portfolio return of 27% and about $1.3 million. Second place team had 9.3%. Okay. They were an outlier, right? Now, when you click on a team, including your own, you can see more detail, but you can't see the detail of the trades of the other teams, just your own. Okay. Now, there's 3 columns that matter. Portfolio value is how you're scored. Okay. That's tracked in real time. What matters is where you end up at the end of the 6-week sprint, right? Second column is longs. In the trading competition, you trade equities, right? You go long, which means you buy the stock, or you can short. That's it. Okay. Long, short equities. Bloomberg has this real trading platform you're using. It does everything. You could trade, commodities, crypto, options, fixed income, all disabled, right? The only thing I've enabled is equities, right? Stocks, mutual funds, ETFs. I'm just giving you a heads up, right? So, for example, the team that won last semester, like, why were they such an outlier? You can see in the 10 trades they made, they bought a company called Palantir, which made 300% last year, and they wrote it up and won. Okay. But again, probably not going to do that again. You can see their performance. Column number 2, got to have a minimum 10 longs. Okay. Don't care how many shorts you do, you go long or short, but you got to have at least 10 longs each half of the semester. If you have less than 10 longs, you get disqualified. Okay. So you got to be in stocks. You got to trade. Can't stay in cash. That's the second thing. Available cash starting Monday, you have to be below 300,000 in cash the rest of the semester. Okay. If at any point you're above 300,000 in cash, you'll get a warning. The second time you're above 300 cash, I'll disqualify your entire team. You have to trade. Don't care if the market goes up. Don't care if it goes down. You trade. In fact, in previous semesters where the market was terrible and they had to trade, the winning team actually lost money. They just lost less than everybody else. So it's just relative performance against the teams in your section. Right? Make sense? So again, between now and Monday, start trading. Get out of cash. Right? Matter of fact, stay out of cash. So for example, if you buy a stock and you sell it at the same time, buy something else. Right? So don't just sell it, wait a few days, and say, oh, let's figure out what to sell. Or don't say, I don't like where the market's going, I'm going to stay in cash. No, got to constantly trade, got to stay in the market the whole time. Got until Monday to get out of cash. Right? So, again, your section which you have to select every time you come here, even though you'll just see your one, is right here. Across the top, settings, these are the rules. So here are some key rules. Number one, buying a stock is called a trade idea. Not my language, that's Bloomberg's, right? When you buy a stock where it says cost basis, next tick, what that basically means, you can only do market orders. Bloomberg allows limit orders. I have disabled that. So you can either go long or short as a market order during business hours, right? Which practically means in the US, that's if you buy a stock after 5 o'clock, it's not going to execute until the next trading day. Okay. So at market orders, can't do limit orders. That's for buying or selling. They can't do a stop loss or anything like that. Matter of fact, in the real world, it hit me this morning. I was going to make an actual buy in my personal portfolio. I was sitting at my medical facility doing the thing that I don't like to do. And I was like, oh, look at all the data. Lilly looks good tomorrow going to their earnings. So I was going to buy some Lilly. And then I forgot to put the order in. And then it popped, like $30 at market orders too late, right? So same thing for you. If your team captain does not go to a Bloomberg terminal and buy a stock, you can't buy it. If your team captain doesn't go to a terminal and sell the stock, then the stock could be plummeting and you're going to keep losing money as a team. Okay. And so that's why that person's very important. And the only way you can buy or sell is at a Bloomberg terminal. Can't buy or sell anyplace else. Okay. All right. You buy market orders, and part of your commission is every time you buy or sell, you have to give at least a 50-character explanation. Now, in previous semesters, I used to make them write a paper at the end of the semester. Why'd you buy everything or sell everything? Nobody wanted to write it. I didn't want to read it. So now what we do is we say at the time of buying or selling, write a 50-character explanation. It's not 50 words, 50 characters, sentence or two. You got to explain why. That's your true commission in the competition. Right? Selling a stock is called closing the stock. Close the idea, right? I've disabled auto closing. You want to sell it, you got to come to the terminal and sell it at a market rate. Minimum investment levels. You start with $1 million. You can't buy anything less than $10,000, right? Not going to let you buy a stock for $100. You got $1 million portfolio. Minimum $10,000 investment in anything. Also, you can't put more than 20% of your portfolio at the time of purchase into any given stock, right? And if you trip up any of these rules, the system won't execute it. It'll tell you what you broke, okay? So forced diversification. Security restrictions. I am letting you buy or sell a stock anywhere in the world, right? You don't have to just do U.S. stocks. Like, you know a lot about China? You want to trade in the Hong Kong exchange? Go for it. You know a lot about London? You want to trade in the London exchange? Go for it, right? That's not a restriction as long as it's publicly traded. In addition, I did put a couple limits though. No micro caps. Minimum $500 million market cap to buy a stock or to short a stock, okay? And minimum price of $3 a share, right? So if the stock is less than $3 a share, you can't buy it. Stock is less than $3 a share, can't sell it. No penny stocks, okay? Now, if you buy it and it goes below 3, you can keep it, right? But you can't buy any more, right? So just FYI, $3 minimum price. And that's currency adjusted. Holding restrictions. The simulation allows day trading. I have disabled it. I put a 1-day holding period. Anything you buy or short today, you can't sell or cover until the next business day. So you buy today, short or cover tomorrow. It's not 24 hours, it's a business day, but it's a business day. And when you buy something, it's got to execute during the business day. So again, US, you buy something at 5 p.m., it's not going to execute until Thursday. And then you can't sell it until at least Friday. 1-day minimum holding period. And that is time of market. So you try and buy something at 3 o'clock in London, East Coast time, market's closed in London. So it won't execute today. Okay. Commissions. You pay institutional pricing, penny a share, right? So commissions are not that much. You buy 1,000 shares of something, you pay $10, right? That's not going to have a big impact on the competition, but it's a realistic pricing that an institution would pay. All right. And then finally, again, I've disabled everything except market orders, no limit orders. All right. So back to, these are the rules. All right. I got $1 million. How do I buy a stock? Upper left-hand corner is called compose. That's buy a stock. It'll load the screen. I'll give you two choices. Now, the last firm you were on in Bloomberg will already be loaded. Okay. And then from there, you can buy or sell. So in this case, I have Lilly loaded. All right. So I can either go long or go short. All right. Long is buy, short is short the stock. If I want to switch to a different company, I just type it here. All right. So let's say I want to buy ExxonMobil. It will give you the current share price of ExxonMobil. The rest of the stuff doesn't really matter. And then down here where it says network, that's your class. Now you will only see the class that you're registered for. As the admin, I see all the classes, including previous semesters. Okay. So in this case, I have to choose a network. You won't have to do that. So in section 301, you'll notice where it says cost basis, that's grayed out because it's only allowing you market orders. You put in the dollar value of what you want to buy or short. You don't put in the shares. Bloomberg will figure it out. So I have $1 million of cash. I'm going to buy $300,000 of ExxonMobil. 300, and you can put K if you want to be lazy. Up here, it says send, that's where you submit your order. If you trip up any of the rules, it won't execute the trade. And I'll tell you what you did wrong. Number one, can't put more than 20% into a stock. I put 30. So that's rule number one. Number two, I didn't write my 50-character rationale for Exxon. Right? So I go back, I correct. I change 300,000 to 200,000. And then I give my explanation. So buying ExxonMobil on rising oil prices, which will help earnings. I think that's 50 characters. Submit my order, and then it places the order. Now, unlike other trading simulations, they'll just execute the order whatever the price is. That's not this one. When you submit an order, it actually goes through the real world trading system and it looks at the bid-ask lots. So it's going to try and find the actual bid-ask lots that are available to actually buy the stock. If you buy a company like Exxon, it's not going to matter. But if you buy some little tiny company that doesn't trade a lot of stock, we've had in the past, people like Professor Peretti, I can't buy this stock. And the answer is because there's not enough available in the real world to buy. Same thing. They were stuck in a stock. They couldn't get out because there weren't enough lots to sell the stock. So it's going to go through that. Might take a few minutes. All right. So while it's doing that, it'll work through. And then once it's there, you'll see in real time. So for example, this morning in my first class, I bought Lilly, 11 a.m. section. So now that the order's filled, you'll also see real-time portfolio values. Okay, and that'll just update throughout the day. Doesn't matter where you are today. It matters where you are the day this ends in about 6 weeks. It's on the cylinder. All right, assuming you own a stock, you have to click on it, see your portfolio. All right, so if I want to get rid of, I'm in the wrong section. This is a previous semester. If I want to get rid of a stock, circle red X, that's called closing the idea. That's sell a stock. That's how you sell. You will not see the circle red X if you don't choose your industry from the drop down. Just letting you know. All right, questions about the trading competition? All right, your captains can get to this immediately. Feel free to start trading. Got to be out of cash by Monday. All right. Now, the only person that can access this is that captain. However, I'll let you know two things in Bloomberg might be useful for your teams. As you know from your certification, W is worksheets. These are tracking worksheets you can put into Bloomberg. I got a lot of them, but yours will be blank. You will create a new worksheet. Call it whatever you want. It'll have these kind of predefined templates. Pick one to start. You can start with a blank one, but I'll start with either the basic template or I'll do a equity buy-side template. Create. It'll load a few tracking items and I'll ask you to put in some stocks. So I'm going to put in XOM, ExxonMobil. Next row down, I'm going to put in American Airlines, who I bought in the last section. And next row down, I'm going to put in Eli Lilly, who I bought in the 11 a.m. section. So load all the data for these companies. Now, these are the starting templates. If I want to edit the template, just double click, insert a column, and then you can put in whatever metric you want. All right, so you can track anything. What are the earnings estimates? What is the buy, sell, hold opinion? What is the price that I bought? Right? I just tracks the templates. When you save these worksheets, share. Just like I did when I registered you for Bloomberg, if you put the name of your team members' Bloomberg account, everybody sees the template. So I'd recommend two templates, two worksheets. Number one, here's my portfolio. That's what we've about known. They can't see Bloomberg, but they can see that for the team. Worksheet number two, I put in recommendations. So here's a team suggestion of what we should buy. So even though I'm not trading, I might say, oh, here's a company I think would be great to look at, put in the template, put in the worksheet, and then the team could talk about it as you go through. I'd also recommend today that you create a group chat with all your team members, not just for the trading competition, but all the other projects that are coming in. Questions about any of this? All right, go forth and trade. So go ahead and head back to some seats. We're going to now talk about EIC. All right, so while you're going back to your seats, your second homework due Monday, 10 a.m. for all sections is an EIC assignment. EIC, kind of the first content section of the class, outside the overview, which we did this past week. So as we talked about last week, approximately 50% of the performance of any company is that external environment, right? The market. Markets matter, okay? EIC is a framework to explain that external environment and how it impacts an industry and a company. EIC stands for economy, E, industry, I, company, C. It's a framework brought to the school by Sarah Kroenke. Professor Kroenke was a Wells Fargo analyst, used it on Wall Street, brought it here. Okay, so we're using it and teaching it to you. So the first part we're going to talk about is the economy part of the framework, right? Your homework is on Chipotle, CMG US Equity, and the fast casual industry, okay? I'm going to use Southwest Airlines and the airline industry as a proxy to kind of go through a process to show you how to do your homework, okay? So E, economic analysis. So the idea is that macroeconomic environment, how does it impact the industry and how does it impact company performance? And I'll give you an example. Airlines, 20% of the cost of an airline is fuel. So oil prices are very important to the performance of the airline industry. When oil is $90 a barrel, none of the airlines make money. When oil is $60 a barrel, all the airlines make money. So tracking what happens with oil prices is very critical to this industry. I posted on LinkedIn yesterday that the average price of eggs tracked by Bloomberg in the US is $7.08 for a dozen white eggs. It's gotten very expensive. Yesterday, not Wells Fargo, Waffle House announced a 50-cent per egg surcharge on every menu item that you buy. All right. Egg costs have gone up. People are upset about it, but it's impacting food, fast casual industry. So that's the point. That's a very important economic indicator, because if food prices go up, then it's going to impact the profitability and the attractiveness of the food industry. Economic indicators. I just bought ExxonMobil. I don't think the price of oil has anything to do with the price of eggs. So Exxon's not going to be nearly as affected by the price of eggs, just like Chipotle is probably not going to be affected as much by the price of oil. A little effect, but not as dramatic. So economic indicators kind of vary by industry. So what are they? Okay. Now, to help you with the kind of overall market, with the idea that if the economy is better, rising tide rises all boats, some more than others, but good economy, companies tend to do better, bad economy do worse. What's going on in the economy? So you know for your certification, but I'm going to show you a couple screens in Bloomberg to help you. One screen in Bloomberg, it's called ECFC, Economic Forecasts. Defaults to the US, but you can put in any country that you want. So you want to look at China, you want to look at Germany, you want to look at Russia, it's all in here. Historical data, economic data, forecast economic data, kind of like companies, right? So just as analysts forecast companies, economists forecast countries. So for example, last year, 2024, US GDP, 2.8%. That's actual. 2025, expected to fall to 2.2%. 2026 GDP, 2%. Today, probability recession in the next 12 months, 20%. That's US. Okay. Where's this data come from? Look on the 2.2 next year. Bloomberg tracks 75 economists, see the answers in the bottom, that are all forecasting GDP. They all upload their data to Bloomberg. Bloomberg averages the guesses, just like the consensus estimate. That's the economic forecast consensus. Okay. Now, why is GDP lower? Well, you see a forecast, parts GDP, consumer spending, government spending, private investment, etc. One big component to GDP is government spending. Last year, 3.4%. This year, 1.9%. The reason it's going down dramatically, Trump. Right? In the last 2 weeks, he has slashed real money coming out of the government, laying off a bunch of workers, shutting it down. That's going to affect GDP, right? Because government spending is a big part of GDP. And if we spend a lot less, GDP will be lower, right? So again, you can see that forecast here. You see forecast for consumer price index, core price index, housing, labor, current account deficits, budget deficits, interest rates, exchange rates, all in here. Historical forecast, economic data by country. Second screen, I'll highlight ECSU, Economic Surprise Index. This was created in 2008. The whole idea is there are 42 economic indicators that Bloomberg tracks, put into 6 buckets that leads to an overall algorithm about how the overall economy is expected to do. That's called the surprise index. What Bloomberg tracks is the actual data reported by month for every economic indicator against the expectation. Green, positive surprise when it's reported. Red, negative surprise when it's reported for that indicator. So for example, on February 5th, ADP reported 183,000 new jobs added to payroll. That was above expectation. This is what happened when the news was announced before the market announcement and after what happened in the market. Okay. So again, yes. It beat whatever the expectation was, and you can switch it to either percentages or numbers.
So it's not necessarily a good thing. Employment rate going up is green.
Well, no, what it meant is 185 was higher than expectation, which means more people were higher than expected. That should be a good thing. Okay. And so on the right, you see the summary of the 6 categories. So what's been happening is as data's come out, there's been positive surprises for, you can see it right here, housing. Housing continues to come better than people expect. Right? When it comes to industrial production, the data that's coming out is worse than expected. Labor keeps coming in better than expected. That's number of jobs and unemployment. Personal household income comes in better than expected. Basically, we're making more money, we're spending more money. Retail is better than expected. We're buying more stuff at the retail stores. The wholesale production is higher than expected. And surveys, consumer confidence. Basically, people are still feeling better than the economists thought they would. So 5 out of the 6 groups of indicators right now are continuing to exceed expectations. Right? That's been good for the market and the economy because up in the right, since 2008, that line graph tracks 2 things. One line is the S&P 500 index. The other line is the surprise index. Correlation, when there's positive surprises, the market goes up. When there's negative surprises, the market goes down. So a couple things here. What's going to happen with the economy and have we figured it out? Those are a couple of the screens that I just gave you. E, questions. Now, as part of every assignment, you're going to submit 2 screenshots, one of them related to E. So in this case, you're going to go to your Chipotle. I'm going to go to Southwest. But as I've told previous classes, you're in this classroom right now. No reason not to take your screenshots before you leave today. Okay. LUV US Equity. Now, you're going to go to RV. And under RV, for screenshot number 1, you're going to go to Markets, subtab Beta. Now, I gave you a comp source called BIX. Make sure you have BIX, I believe. Not analyst curated. Whole firm, country of domicile. Okay, get the right screenshot. If you submit the wrong screenshot, you're going to get a 0 on your assignment because all your data is wrong. So how can we give you credit when all your data is wrong? So back to this. Export, take a screenshot. Now, if I were doing Southwest, start with market cap weighted average. 0.81. That's the beta for the industry right now, 2-year weekly beta. What does 0.81 mean? Is this industry sensitive to economic changes? Industry beta 0.81. What does that tell you? What does a beta 0.81 mean? Yep. Because 0.81 means what? Yeah, the market goes up and down 81%. Or so the company goes down, up and down, the group of companies, 81% of the average company, the S&P 500. So the idea is if the market does well, because the market's rising, and you don't rise as much in a good economy, and you don't go down as much in a good economy, then you're likely to be less sensitive. And you're going to use beta of 0.81 to explain that. Now, Bloomberg gives 2 betas. They give a raw beta and an adjusted beta, right? The adjusted beta is 2/3 of the raw and 1 weighted average. So what they're doing is they're using a smoothing coefficient to take the raw beta and move it 1/3 closer to the mean. Now, there's economics, statistics, arguments about whether or not to do that. I don't care. We're ignoring that. In this class, just for consistency, we're going to answer our questions on raw beta. Okay. Second, this group of 4 competitors, the discount airlines in the US, has an industry beta of 0.81. Southwest is 0.73. What does that mean about Southwest? If the industry is 0.81 and Southwest is 0.73, yeah, they're less sensitive than the group, which suggests that Southwest is not as sensitive as the airlines to general changes of the market, therefore economic conditions. Does everybody see that? That's brushing your teeth. That's minimum, and you got to use numbers. You can't just say, Southwest is less sensitive without referring to the data. 0. Assignment will not be graded. You can't say Southwest has a 0.73 beta without the screenshots to support that data. Okay, it's part of the minimum 500 words of the paper. Now, the other question, why? Right? Anybody can read the data. Why? Why is the airline industry less sensitive than the average big company to changes in the economy? Why is their beta 0.81? Part of the reason is these are discount airfares. And so the discount airlines tend to be a little less sensitive to changes in the market because they're discount airlines, right? Bigger airlines, Delta, United, probably have a higher beta. Okay, but we're looking at the discount part of the business. Why is Southwest less sensitive than the average airline? Probably because of their network and their overall value to low cost travelers that know them. They're the market leader, right? But you got to have a reason, right? And you got to do it for Chipotle. Questions? This is E. Yes.
You prefer to use some weighted average instead of median?
I use the weighted average because of size. So the problem with median is you have a bunch of tiny companies and a big company, and the tiny companies will draw down the median. And so that's not representative of the total market of either consumers or dollars being spent. So, take Apple as a good example, or NVIDIA, right? Because NVIDIA sells so many chips, they have a bigger impact on the market than some teeny tiny tech company that you've never heard of. But if I use median, the average of two companies could actually lower the overall return and not reflect what's really being spent in the market. Good question. Yes.
Do you want the picture in the document itself, or you want to submit it separately?
When the TAs are grading it, it's very helpful if you put this in line. However, if you submit as a separate file, that's still okay, but you got to have the data screenshot along with this. Now, some people have said when they use the Bloomberg screenshot, sometimes it looks a little fuzzy. That's just Bloomberg because they use a GIF format, as opposed to JPEG or PNG, and it's much lower quality. But as long as they read the screenshot, that's okay. It can be full of fuzzy. It's got to be legible. Yes.
Is this lab open on weekends?
This lab is open from 8 to 5, Monday through Friday that I'm aware of. Monday and Wednesday, we have a class 11 to 5. Other times, generally available. And weekends, it's supposed to be if IT's here to open it. But the auto lock of the door is only open 8 to 5, Monday through Friday. That's why I'm recommending today, before you leave, get the screenshots while you're here. Follow along. No reason not to leave. But otherwise, don't. Come back tomorrow, Friday. All right, back to this. Screenshot number 2. We're now going to get into I, the industry. Okay, so that's economy. Industry. You're going to be an RV. You're going to custom. And you're going to load your spread template from homework 1. That is the second screenshot that's required. As we talked about last week, an attractive industry, positive NPV, positive spread. An unattractive industry, negative spread. Is this an attractive industry? With the screenshot that you're submitting for the I, no, it is not. Because the industry ROIC of 0.47 is much less than the industry WACC of 7.36. That's not an attractive industry, negative spread. That's the easy part. Before I get to the next part, competitive advantage in this class means outperforming your peers. That means your spread has to be above the industry. Otherwise, you don't have competitive advantage, you're just a good place. Using that definition, does Southwest Airlines in the C section with this data have competitive advantage? Yes or no? Does Southwest Airlines with this data demonstrate competitive advantage? Yes or no?
Yes.
Why?
Because their spread is smaller than the other companies or the industry average.
So it's less negative than the other companies. He's absolutely right. He's getting a 0 in his assignment. Why? Because he didn't refer to any numbers. So that is not a correct answer in this class. That will not get you credit. Correct answer in the class is everything you just said. Southwest Airlines has less negative spread than the industry because Southwest Airlines with an ROIC of 1.33 and a WACC of 7.53 has a less negative spread than the industry at 0.47 versus 7.36. That is a correct answer. And that will be enforced on every assignment. And if you get zeros and you say, oh, I submitted all the data, can I get partial credit? I'm telling you right now, on video, no. No makeups, no redos. Don't give data, can't give a correct answer. Don't refer to the data, can't give a correct answer. Don't submit the screenshots, don't submit minimum word counts, no correct answer. First things TAs are going to do when you have your 500 word minimum paper is they're going to open it in PDF or Word doc and say, oh, 500 words, I see 498, 0, no partial credit, won't be graded, no makeups. You submit the wrong file. Oh, I submitted the Southwest spread, not the Chipotle spread. Don't care, we grade what's submitted. Be careful about what you submit and make sure you submit everything. And make sure in your assignments and your presentations, you use numbers. This is a finance class. All right. JetBlue, competitive advantage, yes or no? No, because their spread, 7.46 negative versus 7.94 positive WACC, that's much more worse than the average. They're not demonstrating competitive advantage. More than one company can have competitive advantage. It's relative. And something interesting, Southwest has advantage, not because they create value, but because they destroy less value than their peers. So they're a little bit better at what they do, even though their performance still sucks. Make sense? Okay, that's the easy part. Next part, why? Explain the industry spread. That's the industry that you see. Why is that spread 0.47 against 7.36? Why is it so negative? To answer that question, under I, we're going to use the 5 forces framework for Michael Porter. 5 forces explain industry spread. So the context of that 5 forces explain the spread you see. Buyer power, supplier power, barriers to entry and exit, rivalry, substitutes. Some combination of those explains the spread. They don't have to have equal weight. Let me just ask you, why do you think this industry right now has a negative spread? Which forces are working against the industry? Is it buyer power, supplier power? Is it rivalry? What is it?
Price of gas.
Suppliers right now they don't have control over some of their inputs. Right now, suppliers have higher costs, and that's hurting the industry. There you go. Number one. What else? Yeah.
Buying power because there's only so many airlines that customers can choose from, so they get caught like a price war.
Shouldn't that help though? If there's fewer choices, shouldn't the airlines do better if we have fewer choices?
There's 5 major discount airlines, so they're forced to go inside a price war.
So I think what you're saying is this kind of spills over. You have what you're defining as rivalry. We have 5 discount airlines that are kind of fighting for price for customers, and that is giving more power to the customers. So therefore, buyer power right now is actually not in favor of the airlines, is more in favor of the customers. Barriers to entry and exit. Got to talk about all 5. Does that help or hurt the industry profitability? Are there high or low barriers to becoming an airline? High. That should help the industry. So that's helped the industry, but doesn't appear to be making that much of a difference right now. And then substitutes, are there substitutes? You got to talk about all 5 forces and which ones matter most to explain the spread. Then you have to tell me what the spread's going to be in 5 years. So what's the industry today? Explain with 5 forces. What's the forecast for what you think is going to happen to the industry spread in 5 years? The way you're going to answer this is you're going to forecast the 5 forces in 5 years. Because the simple idea is if the forces stay about the same in 5 years, then the spread's going to stay about the same in 5 years. If the forces improve in the next 5 years, the spread's going to get better. And if the forces get worse in the next 5 years, then it's going to get worse. So you have to explain that in the context of 5 forces today and 5 forces in 5 years. Yes.
So a lot of my other classes, define substitutes as a different product, but for the same purpose. So it's like for like an airline, it would be instead of like flying, you would drive. For this one, it would just be like the same. Or
They'll be somewhere. So the point is, a substitute to flying would be driving. So for example, if I'm going to Raleigh, Durham, I could drive 5 hours or I could fly. That's a realistic substitute. If I'm going to LA, I don't think the substitute matters as much. If I'm going to London, good luck, can't get in a car. So that's the point. Substitutes matter. They just may be different depending on your situation. And so do the substitutes matter? That's a question, right? For whatever industry that you're looking at. But that's a good point. So yeah, substitutes are the same. It's just how are they affecting industry performance today? Great question. Other questions? All right, 5 forces today, 5 forces, 5 years, referring to data. Okay. Now, I do not expect you to know everything about Chipotle in the fast casual industry. I do not expect you to know everything about airlines. I don't admit to know everything about these companies and industries. But the beauty is you have an amazing tool here. So, a few things to help you. In Bloomberg, very helpful screen, BICO. BICO stands for Bloomberg Intelligence on a Company. Once you've loaded the company, type BICO. Bloomberg hires ex-sell-side analysts on Wall Street to curate what's important for a company and industry. It's all right here. So these are the ones who've read through the analyst reports, read through the industry reports, and they said, here's what's really important for this company. This will help you answer these questions. Second screen you can go to is something called BRC. These are the actual analyst reports that we have access to on the companies. So for example, JP Morgan wrote an analyst report on Southwest Airlines and the airline industry this morning that's 15 pages long. Read it, use it, help you. Because the same thing, JP Morgan is trying to tell institutional investors, hey, what's going on with Southwest and what's going on with the airlines? It's in these reports. That will help you answer these questions. Another screen, BI, Bloomberg Intelligence. Bloomberg has industry primers. Tell it what industry you want. Airlines. Short code, BIAIRL. That is the industry primer. Here's an industry dashboard. Here's industry market share, industry cost data, macroeconomic data affecting the industry, traffic, 5 forces data on the industry, competitive data on each of the companies in the industry, EIC. Click on market share. There's the market share of every US airline. Actually, this is global airlines. I can switch to US. Okay. Oh, by the way, on the left, macroeconomic data, industry data, company data, cost data, traffic data, news and research on the industry, events, comp sheets, market data on the countries that they're in. It's all here. I'll tell you, use this to help you answer these questions. I don't expect you to know everything about all the industries, so you're going to have to use data to answer these questions. So here's the comment. Don't plagiarize. So Southwest Airlines, I use the JP Morgan analyst report to answer my question on the I and the C. Okay. Now, when you submit your assignment, first thing TA is going to do, they're going to open up and they don't see your screenshots. They're going to give you 0, not go any further. Second, they're going to read your PDF or Word document. They're going to check the word count. They don't see 500 words. They're not going to grade your paper. Third, they're going to look at the plagiarism score. If it's above 30%, then they're going to refer you to the Honor Council through me for plagiarism. Except when they see above 30%, they're looking to see if you have a bibliography and a footnote. If you have a bibliography and a footnote, you're cool. You're cool. That's not plagiarism. But if you have more than 30% and you don't have that, then that's plagiarism. All right. The principle is basically this. You cannot represent somebody else's work as your own, but you will need to use other people's work to answer these questions. So somebody asked in the first class, they said, well, what's your standard for the bibliography. And the short version is I don't care so long as you have one. So I'm not going to say use Bartlett's or this standard or that standard. Great, another class. But bibliography, I use the JP Morgan report. Bibliography, JP Morgan analyst report, February 5th. I took a quote out of the JP Morgan report, copy and paste. Quote, footnote, JP Morgan analyst report, February 5th. All right. I took something out of BICO, Bloomberg, BICO. Took something out of RV markets, whatever you did, just refer to it. That's what's important to me. The standard is don't represent somebody else's work as your own, but you can curate other people's work, and you will have to understand how to answer these questions, because this is real world. Can't use case studies from like 10 years ago or textbooks, too outdated. What's going on in the industry today is different than what it used to be. Does that help? Questions clear on that? All right. If you had a question? I would just if you reference something in Bloomberg that's not the actual report, just give the screen in Bloomberg you used. As I said, I used the Southwest BICO, something like that. Just something that's a reference. Other questions? All right, that's the I. All right. The final part is C, company. Does a company have competitive advantage? We're using relative spread against the industry for competitive advantage. So Southwest, back to the second screenshot, RV, custom, spread template. Make sure you have the right comp source. Southwest, we said, does not have or does have competitive advantage because its spread is less negative than its peers. 1.33 with 7.53. It's about a 6% negative spread against industry 0.47 against 7.35, a negative 7% industry spread. That suggests they're a little less bad and some competitive advantage. Why? Explain. What do we know about Southwest that allows them to do a little bit better? And final question under C, is any of this going to change in 5 years? So is their competitive advantage going to change? Is Southwest, because they're good, improve? And so they'll be less negative than their peers or even positive? Are they going to be about the same position in 5 years, or are they going to be worse? And why? Now, the final thing that you can use data outside of Bloomberg. There's more in Bloomberg to look for. But I'll say, caution you. Don't use sites like Investopedia. I'll give you an example. So you go to Investopedia and you look up Southwest Airlines, you say, oh, it said the return on equity for the airlines is yada, yada, yada. Don't care, not part of our assignments, different class, won't get any credit. To answer questions in this class, use the principles of this class. ROIC, free cash flow, 4 cornerstones, key value drivers. That's questions that you're answering in this class. If you don't use those principles, you're not going to get credit. Okay? Now, final point I want to make. There is one outside report that could be helpful. Use others like Hoover's, whatever, even though it's pretty worthless, given that you have the real data here. But in ELMS, there's a link to something called VBIC, which is the University Online Library. And in the online library, there's a section called Industry. And in Industry, there is a tool called IBIS World. IBIS World is a company that writes professional industry reports. You can use that. So when you go to IBIS World, which is our subscription, type in the company or industry, airlines, domestic airlines. This report, written in October, is their analysis of the airline industry. Over here on the left, competitive forces. That's a 5 forces analysis. Companies, that's a company competitive advantage analysis. It's all right here. So back to site, IBIS World. All right. So the point is you're going to be curating more information than original work. Right. But through that, that's how you're going to answer questions, not only for this assignment, but other assignments. So you have IBIS World, you have BI, you have BICO, you have BRC. There's probably other things you look up in Bloomberg, CN, company news. All that can help you with these assignments. Questions? EIC. Your company is Chipotle, CMG US Equity. Make sure when you go to Chipotle, RV, markets beta, RV custom spread, you put in the right comp source. Make sure that last week I told you to go to settings, global settings, second tab, 50 companies, not 10. Somebody came up to me in the last class. They're like, why can't I get your data? I said, well, how many companies are on your list? I said, 10. How many companies are on my list? More than 10 for Chipotle. That's why you have a different answer. That's going to be a problem with your assignment. Okay. So make sure you did correctly what you need to do for homework 1 to set your templates up correctly to answer the questions. Because if you limit the fast casual industry to 10 companies, you're not going to get a representation of the fast casual industry because there's a lot more than 10 companies that sell fast food. That was her problem. Questions about any of this? Homework 2, do Monday 10 a.m. for all sections. TAs have office hours the next 2 days. Unless they say otherwise, they are in my office in the finance department upstairs on the 4th floor. That's where they'll be holding their office hours. EIC. All right, I'm going to stop here and end class a couple minutes early to give you time so that if you want to start getting your data today before you leave, have at it. Okay? If you want to come back next couple days, you can do that too. It's up to you, but I'm giving you time. Okay? Now, sign-in sheet. This, section 301, this is the attendance sheet for today. I'm going to put it under that monitor on that table. Make sure before you leave class today that you sign the attendance sheet. Okay, very important to do as well. All right, before I turn everybody loose and end the video, any final questions? So between now and Monday, trading challenge open, start buying some things. All right, between now and Monday, homework 2, Chipotle, CMG US Equity. Gave you a recipe for finishing it. Good luck the rest of the week. See everybody on Monday. Good luck.